there are some altering opinions that rates will remain where they are or even potentially come down in the coming months. So going to be interesting to see how the Feds handle this. It is something to not concerned about, but certainly if Feds raise rates again, will we see more bank failures? Interest rates depressed across the yield curve until banking crisis passes. Inflation sitting at 3.6% at the end of 23, down from 6.5% at the end of 2022. Unemployment, 4.2% at the end of 23, with recession, 3.7 without it, up from 3.6. Crude oil, highly volatile, trading between $60 and $70 per barrel this spring. After-tax income rising 4% in 23, adjusting for inflation following a 6.1% drop in 2022. So your dollar is becoming more valuable again. Is that exciting? Now, as it relates to interest rate, at the conference last week, there was an interesting statement made that I want to share with all of you to consider. Here was the statement. It said interest rates will not be going up in the foreseeable future in any great jumps. And the reason for that is the Feds raised rates so rapidly that it was really the rising interest rates that caused the demise of SVB, as well as, what was the one in the East Coast? Signature Bank. Well, how is that possible? Well, they had so much money in 10-year T-bills paying 2% that when the Feds raised rates that the banks would now have to pay 4.5% to borrow money from the Feds. They couldn't borrow money from the Feds to pay out distributions to their depositors when they asked for their money back because they had all this money tied up. So they're earning 2% over here, having to borrow new money at 4.5% to pay out their depositors. So that 2.5% increase in capital costs over earnings wiped them out. So the argument they're making is the Feds can't raise rates any higher because it will systematically begin to topple banks all over the country. And I thought, that's an interesting statement. And I think they're right. Now, who knows, right? Crystal ball, hindsight's 2020. But it makes a lot of sense when you stop and think about it. Also, in the last federal fundraise, they only raised it 25 bips. We were anticipating 50. It went up 25. And we believe they did that simply to show, we're not afraid of the economy. A 0% increase would have been bad, and a 50 bip increase would have been bad, because it's like, what are you doing? So they went up 25 bips, but there are some altering opinions that rates will remain where they are or even potentially come down in the coming months. So going to be interesting to see how the Feds handle this, but it is something to be not concerned about. But certainly if Feds raise rates again, will we see more bank failures? Something to watch.